Hey everyone, how you doing today? Topic number 2 with Mr. Greg Dickerson. I actually brought up on my daily financial news this morning. I paused and said it's the scariest thing I've ever heard of, and I just had to ask another expert about it. So how you doing this morning, Greg?
Doing great, Michael.
So I
Good to
don't know if
see you.
I'm doing well, man. So I saw something this morning that scared. I actually saw it yesterday, reported this morning. There's a bank in Denmark. It's called Danske, I think, Danske. They just put out a note that starting July 1st, what is that, like 2 months away? They're going to
hmm
start charging all of their customers who have savings accounts over $16,200. Get ready for this. They're going to charge them 1% interest. So now your savings rate at Danske Bank, if you have over 16 grand, is negative 1%. I thought it was fake news. I went to their corporate website and sure enough, it's right on their corporate website. I'm like, oh my God, this is not a joke. I'm scared. That's crazy.
I wonder if you still get a free toaster when you open an account.
I think you have to bring a toaster with you.
Yeah.
That's
Not only are you getting charged, you got to give them a TV and a toaster in order to open an account.
yeah, that is not. And so, and then it's on their website, right? Danske Financial or something. I
hmm
forget now. It's frightening, but they're basically saying they have too much money. That's what they're
Yeah.
saying. They have it. The word they used is excess deposits. We have excess deposits. I'm like, wow, you have too much. A bank has too much money. I just that's this is the first one. I've never heard of any other bank going negative on savings accounts. I've heard zero,
Well,
but
so, this is the discussion that we're having in this country is what happens when, what the Fed is doing, all the liquidity, zero interest rates no longer works. And guess what, folks? We're going to be testing that real soon because we're in a hyperinflationary stage and all of this liquidity is going to come home to roost at some point. So when that happens, what options do the Fed have? What else can they do? And the only thing they can do is go to zero where you have negative rates, which means banks are going to have to charge you to hold your money because there's so much liquidity out there, and that's the only way they can make any money is, if they
uh,
have to loan money out for free or even at a bonus, they have to charge depositors for that. So that's a very real consequence of what could potentially happen in this country. And you talk about the dollar, value at jeopardy, in your currency devaluation. It's already starting to happen abroad, and it's potentially on the horizon for the United States.
well, I mean, I just want to play this out, right? Again, I'm not saying we in the US or any of my banks will go negative, but I'm looking at this going, if I was in Denmark and that
hmm
was my bank, what would I do? Well, first off, I get my freaking cash out of that bank, right? I'd go
Yeah.
somewhere else where I'm treated better. I mean, let's just say that because I have no idea. Maybe that's the only bank in Denmark. I don't know anything about Denmark. I've been there once. So, but again, I'm just thinking as an investor, oh my God, leave this bank. Second, I got to buy some assets.
hmm
I mean, really, that's what it would come down to. I mean, again, assuming I was paying debt, maybe I would pay debt down. I'm just trying to think what the hell I would do because I still have to have operating income. I still have to have margin. I mean, do I just go buy a lot of crypto? Do I go buy Bitcoin and Ethereum and Litecoin and it just chain? I mean, oh, my brain hurts.
Yeah, that's the argument for cryptocurrencies and the whole blockchain, network and technology is decentralization of stores of value and currency so that you don't have to deal with banks anymore. You don't have to have credit card companies, instant transactions, things like that. So it's really interesting. But yeah, I mean, if all of a sudden my bank said, hey, we're going, which they sort of do, they charge you fees, this, that, and the other, but if they started saying, we're going to charge you for your deposits on a percentage basis annual, yeah, I'm out.
Yeah, I'm
I'm
done.
going somewhere else,
Yeah.
or I'm going to find another way to transact, with my cash that doesn't require keeping it in a bank.
Absolutely.
So, right now there are no real solutions other than the crypto markets, and they're so volatile right now that doesn't really make sense. And that's why, again, those are stores of values, those are assets. They are not currency,
Yeah, I don't think they're
but
currency, man.
it's, at some point, the way that money could be potentially stored and exchanged, but not with like Bitcoin and things like that because they're just too volatile. But a digital dollar, absolutely, where the Fed is the central bank, and then you get rid of all of the other banks, that is a potential that could be
Yeah.
coming down the road.
I mean, the other thing I think about is, gosh darn it, I'm really happy I own a lot of assets because, again, right, in an environment where savings go zero, people, again, you go buy assets. I mean, that's the answer, right? You push away cash. And if you think prices are stupid today, and I think the economy, I think there's too much dollars chasing assets already today. I mean, the stock market would explode, real estate would explode, crypto would explode. I mean, you think they're expensive today. I mean, wow. I mean, I read that and it was the scariest thing I've read in years.
Yeah, it's pretty amazing. And we've heard it. They've been talking about it happening in this country and, happening in Europe. They're closer in Europe than here. And yeah, I mean, that's a real interesting contemplation. And what would people really do? And then if you start working towards a system where, let's say, the dollar's worthless and, there is no real exchange of currency in the fiat sense, then what assets do you want to own? Do you want to be in stocks? What can you trade them for? I mean, really, at the end of the day, if you own a store and you're selling food, would you take somebody's stock in exchange for your food? Probably not, because if the dollar's collapsing, then what's that company really going to be worth at the end of the day? Yeah. So what do you want to own? People got to sleep? They got to eat. They got to put clothes on their back. They got to go to the doctor. You got to get educated. So the core services that we saw that were sustained through the pandemic when everything else got shut down, that were the essential services that kept going. So those are the assets you want to own, is that the businesses and the real estate that those businesses are housed in is, at the end of the day, what you want to own if you're facing a situation like that. But it starts, at certain levels. We are in some very interesting times.
There's already first off, there's excess savings. We've heard about it. There's, $1,400 checks and stimulus going out, which again is being saved by a large percentage of folks. It's being required by some. I get it. It wasn't targeted enough for my liking. But
what is the savings? What is the percentage that we're down to that they're now paying you for your savings? I mean, we're getting close.
Yeah, it's
1%.
Yeah, I think one of mine is 1. I think the other's like it's point something. Yeah, it's not good.
I mean, you used to be able to get 5% in the money market, CDs, all that. Not too long ago, we're down to 1%. We're not too far away from where you're not going to get paid, or it could actually cost you money, to house your money at a financial institution.
Frightening to think about. So anyways, I just wanted to share this with someone else. I had to get it off my chest. I didn't want to think about it too much. So thank you for being my sounding board. We're going to talk about inflation next. Thanks, Ray.
Yeah.